you're here. Welcome.
Guys, I love to see the suit, but we need some ties going on.
I know. Yeah,
you caught us lacking.
Caught us lacking.
We're working on a tie. We're working with on a tie that has ads on it. That's our next ad unit.
We'll send you one. Thank you so much for joining. How are things going? What's the latest in your world? How are you spending your time? Because you got a lot of different things going on.
Yeah, look, I think that the future is very similar to what you guys are doing, right? You got to be able to operate businesses, you got to be able to invest capital, and you got to be able to create content on the internet. Mm-hmm. And if you think of what a business really is you got to build products, you got to be able to invest resources, and then you got to be able to market those things. And so I don't think there's any different than what people used to do in the past. It's just now that you do it more as kind of an individual brand rather than a company, and that's what we've been doing.
Yeah, what was the kind of the, I feel like you're going through like the V2 of the Pomp media strategy. There's a daily show now, and you were building businesses before. What'd you learn from those, and where is this going with the next iteration?
Yeah, I mean, look, actually, we used to have a daily show very similar to what you guys are doing, the Best Business Show, which was hilarious when people would have to cite us breaking news. You'd have to write the Best Business Show.
That's
credit.
Amazing.
Good, nice little troll there. But no, look, I think you guys are doing it the right way, right? It's like everyone is up-leveling. And the way I describe it is when content started on the internet, everyone was basically on like their webcam. And then they were like in their kitchen in their webcam. And then it was like, oh, I have like an extra camera instead of the webcam. Now we pretty much just think you need TV quality with digital distribution.
Totally.
And so everyone is leveling up. You guys have built, I think you guys just got a 4,000 square foot facility, all this stuff, right? We've got obviously studio stuff and it's just the cost of the technology is compressing. And now with a very small team, you're able to have massive reach. And I think that's just going to be the future of all this content.
Can we just glaze X for a little bit? I know you've built a business on X. We love X. We've talked to the team earlier this week. I just think that like it's so underrated as a distribution platform. People think YouTube, and there are other great platforms, but the current moment with X has been particularly good for us. And I wanted to know what your take on X is, how it's been going, and any learnings that you have to share.
Is Linda hiding behind your cameras up there or something? Like got a gun to her
she's
head?
got a gun to her head.
No,
we're gonna we just invited Linda on the show.
We want to have her on.
Amazing. No, look, I think that every platform is very unique in what it provides, both in terms of the type of audience. Obviously, who's on LinkedIn is very different than who's on X. LinkedIn finds out things maybe a week or two after people on X find out about it. But also, I think the type of content that lives there is really important, both in the form factor and also the actual substance of it. And so it doesn't make a lot of sense to go and talk about, kind of daily news on LinkedIn. It makes a ton of sense to do that on X. And so what I think many people, including ourselves, have figured out over time is that we were essentially using X as an engine of growth to drive people elsewhere. Go watch on YouTube, go listen to the podcast, go read the email, go to this website, whatever. Why not be able to just bring that content right there in the feed? And I think that that's really what they have leaned into, and that's why it's working. And so the daily show that we have with them, I literally sit at my desk, talk direct to camera. We cut it up in this modular format and deliver it right in your feed. You don't have to go anywhere. You just consume it right there in these bite-sized components. And it's no secret that your guys' kind of clip strategy and the live streaming, everything you're doing is like very X-centric. And I think that doesn't mean you give up on the other platforms. It just means that you're building for X and everywhere else is kind of the exhaust of that content.
Yeah, it is crazy. Like there was all this fallout from like, oh, they banned links. I can't link to my YouTube videos. And I'm like, but you can just upload those videos here. like they literally have a video product. You wanted to link to text. Like you could just put the text on X and it'll do way better. And it's not that complicated. And you might have to change your monetization strategy a little bit. Maybe the rev share is going to be different on YouTube. It's like a per video thing, and X it's monthly, but like it all works out. You're just playing for attention and reach. And obviously X has this, the thing that I like about the flywheel is like on YouTube, I could every once in a while, another creator, like you would comment on my video or I'd comment on your video and we'd see each other, but we couldn't DM each other on YouTube. But on X, it's like if somebody sees a clip and they respond, oh, I think, Pomp's wrong about this, or I love this. Like we can all hop in a DM group chat immediately and just start talking and then hop on the show, do whatever. And so like, I think the water cooler with all this stuff is actually really, really inventive. Anyway, Jordy, you got anything else?
It's been interesting. People, will point out, they're like, I don't understand how TBPN is like has so much attention.
People say it's
YouTube
good,
channel,
and yet
the
it's
YouTube
small.
channel is small. It's like, we don't really spend any time on YouTube.
Yeah.
We were happy to just focus on one platform as,
where
a very young
ton
company.
of important tech people hang out. Yeah.
Yeah.
Anyway, let's talk about the other news. The SPACs in the news. How do you raise $250 million? Where does that money come from? That's so much money. Jordy and I both raised money at various times,
it wasn't 6
crazy.
months ago that I think we were on the show talking about how there's nothing intrinsically wrong with the SPAC.
Totally.
It's just been maybe misused or abused in the past, and
also just bad timing, right? Because
timing, and ultimately what matters is the underlying asset, right? Are you,
so give us the pitch for your SPAC, and then we're going to pitch you SPACing TBPN.
All right. Look, I do think 6 months is actually an interesting time frame because that's about when I decided, hey, I should go do this. And, look, I got the big audience. For years, bankers have been coming to me saying, do a SPAC, do an RTO, do all these things in the public market.
Sure.
And I always joke that we're all about the same age. Pretty much everyone in our generation watched The Social Network and wanted to be Zuck or invest in Zuck. So everyone ran to the private markets. It was like, Wall Street and hedge funds, all that stuff is kind of loser stuff now. The cool stuff is in tech. But we have a world where this undisciplined monetary and fiscal policy is a huge persistent tailwind for liquid assets. Crypto and Bitcoin obviously saw a benefit from this, gold, public stocks, et cetera. And so I think a lot of people, you're starting to see them say, hey, how do I marry technology stuff with liquid assets, right? And so you're going to see that. With the SPAC in particular, I agree with you guys that the vehicle itself is not the problem. It's that people were basically doing public venture capital. Buy a money-losing company with a high valuation, and you got to try to grow into it. And some people did do that, but a lot didn't. And so it got a bad name. But what I really have talked about is like, look, if you
the other thing, sorry to interrupt you, there was an adverse selection issue at the time as well, which was that the companies had huge access to capital in the private market. So if they were SPACing, it was possible that they had exhausted.
Yep. If you couldn't do the Stripe thing and just do a $3 billion tender, you would SPAC or something.
But there are businesses today that are fundamentally good businesses that have bright futures that maybe should just get public and get
I remember years ago talking to a public markets investor, and he was like, well, yeah, like once you're in the public markets, like you shouldn't ever need to raise capital again because you're supposed to just be a going concern. And I was like, wait, what are you talking about? Like businesses lose money. I'm in venture. Like this is what you do. And he was like, no. Like if you're publicly listed, you should not be losing money for a long time because then you just shouldn't be a public company. I was like, oh, I didn't even think about that. But yeah. Anyway, sorry to cut you off.
Yeah. Well, I think that, I've always looked at this as if you buy a good company that has all the right criteria to be a public company, and you do it at the right price, which is an important component. Basically, if you're a disciplined buyer, then it doesn't matter who the sponsor is. It doesn't even matter what the vehicle is, right? It should do well in the public markets, to your guys' point. And people weren't doing that. And so I think that is kind of one big component. The second thing is a huge part of what we specifically have said publicly and in the filings is we want to buy a profitable company. So we don't want to buy a company and then try to make it profitable. Like that's hard. Let's go buy a company that is already profitable. And the reason why that 6 month mark was so interesting that you mentioned that is that's about the time I started to get lots of inbound. And I frankly don't know why. I think some of it was the political change in DC. I think a lot in financial services, there was like a regulatory shift from a headwind to a tailwind. So people are like, okay, like this may be a better time to go into the public market. And then also like think of all of our friends who have built companies that started sometime between like 2015 and 2020. Those companies are just now becoming big enough to actually be public companies. Yeah. And so there's like that cohort of people are now like ready to get into that public market. And so they're looking for the vehicles to be able to do that. And we hope that, we're one of many that they consider to be able to do that.
How does the actual deal work once you find a company? Are you buying a minority stake in the company, or are you buying the whole company? And then as I remember, it was like, you'd usually see like a couple $100 million in a SPAC, but it'd be trading at 4 billion. And then you take a company public and then the share price goes from there. Is that roughly correct? I don't know enough about that.
The best way that I know to describe it is like the SPAC gives you a lot of optionality, which is why I'm attracted to it. So we raised 250 million into the SPAC. You have the ability to buy a lot of a company, or you can buy a very little bit of a company, right? But you have $250 million of cash. Sure. You do have to go to those investors and say, hey, this is the deal that I found. This is the deal that I negotiated in terms of the economic terms. They vote. So if you bring them a bad deal, they can also just say like, screw it. We're going to take our money back and like, good luck. Yeah. So you have to, do a good deal that they obviously are signing up for, but you also have the ability to use pipes and other kind of capital markets tools so that you can size up in terms of total capital invested in one of these businesses. And then the beautiful thing about this is it's a negotiation with a target company. And so it's two people in the market coming together and saying, this is what we think it's worth, right?
Yeah.
This is what they're willing to take. This is what we're willing to buy. And I think that tends to, if people are rational and disciplined, actually end up with something better in the public market.
And it's different than a venture fund where the money is not literally sitting in the venture fund. They need to make a capital call. With the SPAC, like the money sits in T-bills, right? Is that correct?
Correct. Yeah, correct. It's in the vehicle.
Yep.
Some people have interest, some people don't. There's
Sure.
some nuance there. But basically, you can go to someone and be like, "I have the money.
I have the money."
Right? Like I don't
That's
need to
really
raise
cool.
the money out. But LPs can't tell me like, "Hey, sorry,
Yeah.
I'm not going to send the money." Like I got the money, and
Yeah.
and then
He's
you go and
good
you
for
have
his
the conversation.
250.
So I mean, I'm super fascinated by this whole industry. And so are people pitching you? Do you expect this to be something where you get an introduction from a venture capitalist or an investment banker or just a founder? Is this like a founder-led deal? Or are you going to be going outbound, finding some business where they're not even considering selling because they're profitable, they're happy, and you kind of come in, give them the pitch and say, hey, this might be the right time to look at something else. Let's do this deal.
Yeah, I mean, there's a bunch of rules again in terms of like what you can do. So right now I
Sure.
can't talk to any target companies, and
Got it.
that'll be true for another 24, 48 hours. But once the deal's closed, I can actually talk. I've got a ton of people who've been reaching out to me. Frankly, some of them are probably interesting, some of them aren't. I don't know. I haven't talked to them or done the work yet. But also, I think that you have an idea of like, hey, it would be interesting to go talk to these types of businesses, right? And so you want to go and figure that out. The whole key to this
what categories are you excited about? What
Yeah,
is
this is
kind of what are you just going to kind of ignore, right? I don't imagine you're going to, like, defense tech obviously doesn't make sense, or I would imagine doesn't make sense. Maybe
it does. I don't
maybe
know.
it
There's
could.
some
Maybe it could.
profitable thing.
But,
only in partnership with TBPN. No, we're very focused on financial services. We do have a legal mandate. We could do things outside, but financial services is a focus. And the idea there is, I think most people, it's no secret, right? I've got a reputation from all the Bitcoin and crypto stuff. And so like, are you going to go buy that? And I just look at financial services as it's all becoming one thing. Robinhood is a traditional exchange business, but they have crypto as a fast growing segment. Kraken is a private crypto exchange, but they're adding US equities. And so we're just seeing the merging of the new and old worlds in finance. And I think that's where you're going to continue to see this go. Similar to what we're building with Sylvia. That's what we're going to do on the SPAC side, is we're just looking for where can you get distribution directly to my audience with financial related type product, services, and companies. And then that's where we want to play.
Yeah, talk to us about Sylvia. I know you got 18 million sitting in cash. We got some recommendations for hypercars you could pick up if you need one, but break it down.
Stable assets.
Yeah.
They're not
before I
making
tell you
any
about
more
Sylvia,
P1s.
Well, before I tell you about Sylvia, who's the best sponsor? Like maybe we should just talk. Like you guys should just boast them up a little.
Well, next up we got Wander, so we could talk about finding your happy place. We sing,
Find your happy place.
Find your happy place. Book a Wander with inspiring views, hotel grade amenities, dreamy beds, top tier cleaning, 24/7 concierge service. It's a vacation home, but better, Pomp. Do it. Just book a Wander today.
Do it right now. We're not letting you.
people-
We're not
people
letting you
do
off.
$1 million. You could live in a Wander forever.
People
with
dream of
250?
organic integrations like
Yeah.
that right there.
We're gonna clip this. We'll both promote it. It's a dream come true.
Thank you for participating in that with us.
Yeah, you guys got it. So Sylvia is look, I think every single person I know who is in like the business tech finance world, they got the spreadsheet. And the spreadsheet is basically the thing that ties together all your accounts in one place so just like, what do I own?
Yeah.
There's not usually a lot of expense related stuff. It's all about, how much cash do I have? What are my investments? What are they worth? All that kind of stuff. And so what we did is we built essentially a box that you go and you attach your brokerage accounts, your cash accounts, your crypto accounts, your private investments, your collectibles. People have added precious metals, guns, cars, houses, all kinds of stuff. In that box, it gets encrypted and anonymized. And then what we did is we overlaid a bunch of AI models on top of it so that you can do simple things like you can prompt it and say, what's my debt to equity ratio, or analyze my stock portfolio and tell me where you see risk. But also you can email Sylvia, you can call her on the phone. For those that are wondering, I do not have $18 million in my checking account and $500K in my savings account.
At this very moment.
That was some great. That was some great dummy data. But yeah, I mean, it's interesting because I feel like Mint.com was popular and kind of fell off, and maybe even got shut down. I was getting an email about that. Maybe it's done. And so obviously this is an opportunity.
But those are very expense related, right?
Totally.
It's all about like saving money, and there is a huge market. Obviously, people in America, there's a lot of people focused on saving money. But I do think that there is this very specific cohort. You know, the data that we have right now is we just crossed over $2.5 billion connected on the platform. It's been about 4 weeks. And think about it, it's less than 1,000 users that have connected accounts.
Wow.
And so these are people who are multimillionaires who are going onto this platform on average and connecting these accounts. And so to them, it's less about, you know, how do I save money? And it's more about how do I make more money? And that's what they're really trying to figure out. It's like, where's my money? Where are my assets? And then what can I do to actually grow those assets? And we think that there's something interesting to build there.
We're going to let you go, but finish it out with where can people get started with Sylvia?
Well, after they go and they stay at a Wander and they sleep on an 8 sleep, then they can go to cfosylvia.com and they can check it out there.
Okay. Thank you so much for stopping
coming
by.
on.
We'll have to have you back
thanks,
for
guys.
a deeper dive. This is fantastic.
Excited to follow this back.
We'll talk to you soon. Bye.